Live streaming is on.
Hey, good morning, everyone. This is Dan Gay of BlockCerts Blockchain. We're coming to you live streaming on YouTube again on this Friday, and very enthused to have a very popular guest that we had on here in April. And today, Tim is traveling, so we're going to give him a break. I think the guy in this last year worked 2 times 365 days, so we'll give him a break for today. With that, we're glad to have Daniele back after a little bit of vacation. Daniele Minci, who's the president of Fusion Funder and coming to us live from Italy. Good morning or evening to you, Daniele.
Hey Dan, how you doing? Hi Mark. Glad to have you here to the work from here. Yeah, everything's fine. I'm in a cold part of Italy. I was in Austria. So usually during the holidays, people tend to go to the warm places, but I'm going to the cold.
Yeah, well, that's smart. We have friends who have a wedding next August in Venice, and I'm not sure why they were even thinking of that in August, but crazy. I know what the Italians do. They all head to the hills. So with that, we also have Mr. Mark Smedley with us, and Mark is a chief strategist. He's been in the C-suite in his early career with the FDIC, and has also been in the C-suite in the a very large company called Oracle, and is leading a lot of the technology conversation with many companies now. So, Mark, are you still here? I think Mark dropped off. Okay. With that introduction, he had to have an intro. So, Mark, I'd like to say hi to you. Thanks for joining us this morning.
Yeah, thank you, Dan. Can you hear me?
Yeah, we definitely can.
Hi, thank you very much, Dan, for the invitation. Daniele, welcome back from holiday. Thanks, everybody, for joining. Appreciate the opportunity to share some of my thoughts. What I'm going to run through are, quick disclaimer, these are my observations as a person with gray hair who's been in finance and technology all of his career. And so does not necessarily represent the thinking or position of BlockCerts or anyone else. So just thought I'd start with that. And Dan, I'm going to share, I think, if I can.
Yeah, so that tells you something good is about to happen here. And just to tee this up, we're talking about last week. I said, are you tired of being tracked, hacked, and hijacked? And we're talking about Web 3.0. And this week we saw a number of things, which I know Mark and I talked about, Mark's going to share here, where large companies, the largest of companies, are still trying to maintain and hold control. And Web 3.0, we're going to ask Daniele here a little bit about his ideas on Web 3.0. But, the whole premise of Web 3.0 is to turn the power over to the user. And it's quite the juxtaposition, the oxymoron, whatever you want to call it, where big companies are doing everything they can to hold on to that power. And those big companies are still centralized. And in a centralized world, what we saw with Microsoft this week, and I know that's something you're going to talk about, Mark, one day announce a $20 billion investment over the next 5 years. The next day, you say, oh, by the way, we've exposed some records. So it's just another day in the life of big centralized companies. And Mark, look forward to hearing what you have to say here. So
great. Thanks very much.
Go ahead and share your screen.
Okay, can you see the deck?
Yes, we definitely can.
Okay, great. So again, Mark Smedley, if you want to reach me, it's Mark@if Partners. I've spent a long career in finance technology, former regulator, former technology sales exec, and former entrepreneur. So I'm just going to share observations as I see them, having been in the banking and technology industry for most of my life. I'm going to walk through the 4 bullet points you see above. Starting with crisis of trust. Trust is a theme that continues to this day. the rise of the surveillance economy, the acceleration of data monetization, and with that, the corollary is data leakage through hacks and breaches, and now we see a rise in ransomware and other attacks. And then the rise of Web3. Starting, I think it's important to have a little bit of a historical context. So starting in 2008 with the collapse. Hey, I'm sorry, is somebody typing? I can hear some typing in my ear.
Yeah, I was just asking. I was
Oh,
just
okay,
asking
okay.
if you were.
So starting in 2008, the global financial crisis started with the shadow banking system in the US. It spread very quickly across the world. It turns out that securitization of subprime mortgages and then derivatives based on those subprime mortgages, which were not directly regulated by the banking supervisors, created what could have been a Great Depression, only stopped the Great Depression by virtue of a great deal of central bank intervention. Not widely published, but the equivalent of 1 year of GDP went into staving off that crisis, including a $700 billion quote unquote bailout for the US banks. Much of that has been recovered, but the legacy we live in, and a lot of younger people probably don't understand this, the legacy we continue to live in is very cheap money or easy monetary policy. So when the Federal Reserve continues to print US dollars at an accelerated pace, yes, it pumps up the economy and it keeps us away from, going off an economic cliff. The counterweight to that is that it results in a great deal of lost trust, asset devaluation, and we think we see inflation now not on the horizon, but happening in real time in the United States. So there's always a price to pay for any intervention. The price we're paying now and we'll be paying into the future are those sort of costs, economic costs. And then the printing of money also comes with a great deal of national debt that our grandchildren will hopefully be able to pay. That's another topic for another day. Interestingly, and notably, Bitcoin white paper was published that same year, just a month and a half after the banking collapse. So I don't believe in coincidences. I think Bitcoin had clearly been a reaction to irresponsible monetary policy and irresponsible legislation. And the Bitcoin founder, who I don't think we still we don't identify him, but we identify him as Satoshi Nakamoto, has created this thing called cryptocurrency and a movement that fundamentally underpins the Web3 movement. Interestingly as well, the modern fintech movement started around that same year. You can look at analysis that suggests very strongly that modern fintechs rose from the ashes of the banking meltdown. And then Ethereum a few years later in 2015. On the right-hand side, you can see some of the responses from a regulatory and capital market perspective. The fallout really is the lack of public trust, the loss of public trust, and for the banks, strict regulation, which really sidelined them for a number of years. You could argue that they're still sidelined. They can't innovate the way that they would like to. They are straitjacketed into distributing currency in the form of loans, mostly real estate, which tends to pump up real estate prices and inflate the housing market yet again. And if you look at the balance sheet of most major banks, the predominant asset on their balance sheet is U.S. Treasuries. So there's a bit of a shell game going on. It has been going on for years, in which the banks are really have always been sort of adjuncts to the central banks, and today they're sort of subsidiaries to the central banks. Therefore, they're not able, again, to respond to market challenges and innovations, both technological innovations and business model innovation. And then over the years, since 2008, the big tech and fintech have offered and raised a great deal of capital to offer bank-like services without becoming regulated banks. You can see a few examples. The Apple Pay, Google Wallet, Nets in Asia, Stripe, lots and lots of others. 100 billion in fintech capital was raised in the first half of this year, which set a record. And that should give you an indication of the level of discontent with the legacy banking system. The other notable fact, I think, that came out of the 2008 crisis was the conscious decoupling, quote unquote, of China and the US, in which the Chinese lost complete respect for the US financial system. There are quotes you can find about the finance minister of China telling Hank Paulson, the US Treasury Secretary, you know, what happened? I thought you knew what you were doing. And since then, you've seen a gradual decoupling of China and US in terms of China seeking an alternative to the US dollar and seeking an alternative financial construct. And again, central bank intervention continues to this day. We used to call them QE1, quantitative easing 1 through 3. I think I stopped counting. The U.S. Federal Reserve continues to have a bloated balance sheet, which means they pumped a ton of money into the global economy. Okay, so take a break from the financial side. Let's talk about technology for just a second. Having been alive before the advent of the internet, these are iconic images of founders of amazing companies, starting with Microsoft, moving to AWS, Amazon, and then AWS, Apple, of course, Facebook, and Google. Google and Amazon were founded in the internet age. Microsoft prior to internet, Apple prior to internet. They all made the successful crossing of the chasm to web services, one way or another, dominating either social media, e-commerce, or the cloud hyperscaler, cloud infrastructure, cloud services for businesses and consumers. The cost that's been paid for this, however, is, I think, two noteworthy things. One is that each of these companies, one way or another, monetizes data acquired from their users, and they do it in ways that make them astronomical amounts of money. Advertising, targeted ads, reselling data, and using those insights to create more stickiness in terms of their products and services is sort of a well-known secret. And the market so far has accepted the cost of their data being mined for someone else's value because the services are either free or very low cost. The other cost that's been paid is free speech on the web doesn't always result in positive outcomes. You can find examples of murder and mayhem and horrible things that have occurred as a result of some of these social media platforms, and yet the business models have not fundamentally changed over the years.
Yeah, and I think, Mark, consumers have accepted it because of convenience many of the times. But what we're also seeing is that consumers are frustrated with it, and I know that's what we're going to talk about, is taking back control too.
Right.
Yeah.
So, Dan, I'm going to wrap here in just a second. So,
Okay.
GAFA, the question I pose is, who among any of us doesn't use at least one of these services on a daily basis, right? The aggregation and the concentration of computing and distribution and social media power is unprecedented in certainly in my lifetime. This sort of like, it's the web version of the Hertz empire, if you will, the Hearst empire, I should say. There's a thing called the surveillance economy, and most of these business models are based on surveillance and the insatiable need for data in order to provide input to algorithms that enable them to make the money that I mentioned earlier. And I'd argue that COVID and work from home have amplified and accelerated that process. So everyone is under surveillance all the time, whether you are aware of it or not. Every click, every abandoned search is captured by one or another of these large tech companies. And that data is again monetized without regard to compensating or notifying you. It seems to be getting worse, and I'd argue that this surveillance economy and surveillance capital is a business model and not an accident, and there's plenty of evidence to support that. The result is that these platforms sort of stack the cards in their favor, accruing economic benefits and value capture for their shareholders and not for the user. And of course, they continue to set and reset the rules of the game in their favor. And those advantages in economic rents have really come at the cost of your privacy and your economic well-being, I'd argue. Okay, last point is data leakage and identity leakage. And the only point I'd make here without going into the nth degree of detail is it's bad and it's getting worse. A lot of these, the impact of some of these hacks are not widely reported. I can tell you without a doubt that the SolarWinds hack affected everyone on any of the tech platforms. It impacted virtually every US government agency and continues to do so. And it impacted most, I think 450 of the Fortune 500, the top US telecommunication providers, all the cloud infrastructure providers, and by last count, 18,000 customers. Okay, the choice that you've been given until now is to either abandon your digital presence and sort of live off the grid, if you will, or to accept the conditions that are offered, and those conditions continue to become less and less stacked in your favor. Hence Web3, and in my observation, the Web3 movement is really a response to all the above, and its architecture and its DNA is based on the notion that privacy and control should go back to the actual user. Here's a rational definition that I did not write that sort of describes what Web3 is, the foundations and underpinnings. Ethereum has really given rise to the Web3 movement in its various forms, a form of economics based on tokenization and coins, no single point of failure, no dependence on the big tech platforms per se, and then trust and privacy by design.
You cut out there, Mark.
Heck.
Yeah, I think
Can
you
you
got
hear me, Dan?
There we go. We can hear you now. Yeah, you got a weak signal, it looks like.
Okay, and so the user should own their own identity and provide consent for use of their information, and which organizations have access to their data, consenting control sort of at the foundation, and it's a hedge against data leakage in any form, right? Because it's built on a decentralized blockchain with no single point of failure. So you can't hack one node and get access to your information. Characterized by balanced value capture and value realization, control and economic benefit to content creators. And it's really sort of analogous to the early days of the internet. It sort of feels like the internet felt in the mid to late 90s, Dan.
Right.
And also these open communities and business models, continue to be formed, and the use cases are limited only by the imagination. These are common use cases that are in the market already. The whole DApp space is really, really interesting, as well as digital identity as a foundational underpinning. And then you can find some of this information if you search on I think this came from Asari. There were a few others from Consensus that sort of map some of the Web 2 capabilities to emerging Web 3 solutions, right? Domain
Right.
name, servers, data management, storage, music, et cetera, et cetera. And in the DeFi world, there's an equivalent for virtually every traditional financial service. And some of the thought leaders in banking are actually embracing this sort of cloud / decentralized finance model. You'll see more of that as you look at the Goldmans and the JP Morgans and others embracing Bitcoin. Okay, so Dan, let me turn it back to you. I think there are some threats in the market based on the pace of adoption. Media doesn't always tell the right story, is not always accurate, tends to make a great deal out of anything related to Bitcoin, but ignores some of the hacks and malfeasance that occur on the part of the large cloud companies. And of course, big tech could jump in here and try to co-opt the movement, but that is not necessarily a huge immediate risk. But of course, over time, it could be. So I'll end by saying the future of Web3 is really limited only by the imagination. And I'm happy to sort of take any questions or get any criticism. I'll turn it back to you, Dan. Thank you.
Absolutely. Well, thanks, Mark. We'll get a few questions here, but I think thanks for that overview. I think it was really important to share that because we're starting to hear about Web 3.0, but a lot of what we're hearing about Web 3.0 is from the perspective of the big companies about what they're doing on AI and other things. And I think what people need to understand is this is an evolution, and you use that word evolution. And we're in the midst of an evolution that's transpiring. And for us, it's all about control, it's about identity, and it's about data and protecting all of those things. And that's what the promise for Web 3.0 is all about, correct, Mark?
Absolutely. Absolutely.
Yeah. So with that, I have a couple slides I'm going to show here. We've got about 5 or 6 minutes left, and let me just share a couple of things here. One of the observations that I was talking to Mark about as we were talking about today's presentation was just the fact that the Behemoth companies, the largest companies, are trying to maintain that control at the same time when Web 3.0 is all about decentralization and shifting the power back to users. And we continue to see that number one, businesses are grappling with how do we continue to do work in a digital world. It looks like, as the Wall Street Journal said, remote work is going to last at least a couple of years. So how do we continue with that? And we have solutions here at BlockCerts. But one of the things that you and I talked about, Mark, was just the giant companies are pledging about the data breaches and security. Like Microsoft committed $20 billion and made that announcement this week about cybersecurity over the next 5 years. And then lo and behold, the little thing happened that probably they didn't want to have reported, but a few days later, then the new report of a Microsoft data breach. So one thing that I just want to note is the fact that centralization is centralization, and the future with decentralization is all about protection, privacy, and giving the control back to the user. And if you continue to build upon the same centralized platform, which you and I, Mark, have been around for a number of years and know when that started with telecom and it started in technology, and things are still being built in that same technology infrastructure. So with that, you're going to continue to have breaches. You're going to continue to have issues. And Mark, you and I talked about that. You might share a little bit more about your opinions on centralization versus decentralization as we're talking about Web 3.0.
Well, sure. When the internet was, became commercialized and widely available, the aspirations were that it would be a great democratic platform for interactions, business, consumer, etc. And of course, what happened over the course of 20 years, it's been pretty much dominated by 8 companies, or 10, depending on how you count, including the ones that I mentioned. There were Chinese alternatives, Alibaba and Tencent and others, and financial. But the aggregation of power and control and computing ubiquity is really in the hands of virtually 10 companies in the world. So yeah, and I think that trend will continue if it's not challenged. And then I just wanted to make a quick comment on the White House session you mentioned, Dan. It sort of
Right.
felt like, if you remember back in 2008 when Hank Paulson, the U.S. Treasury Secretary, called the top 10 U.S. banks into his office and announced that the crisis was over, that the banks were going to be capitalized, and there was a deal that stemmed the financial crisis. It feels like the White House meeting that occurred yesterday is sort of analogous to that. That all the big tech companies have these problems of security, and they're targets for a number of different malicious code attacks.
Right.
And of course, the White House was impacted by some of these hacks as well. So, just seems to me like it's a press event in order to give comfort to the user that there's a solution on the horizon. And then you saw the announcement from Microsoft. Some of the
Right.
others are a little less public about it. But anyway, just felt sort of like the 2008 Hank Paulson meeting, if you will.
It did, deja vu. It was kind of like a hoodwink. Yeah, here we're doing this. And you and I even talked about this before we saw the breach. That this is kind of tipping their hand to something that is happening here. That's an underlying thing, and then we hear about the breach. So they're like, oh, okay, that makes sense.
Right.
And
right.
Mark, if you, on your right-hand side on the bottom, there are 3 buttons, and we can't see your visual there. If you click on that and then click on settings to share yourself. But we're going to wrap up here in a second anyway. But with that, I'm going to share just a couple quick things. There we go. We got you back. I'm going to share something with everyone here that I think is also, Mark, you pointed this to me earlier in the week, and I just was amazed by this. But there's actually a company, and we talk about Silicon Valley, we talk about big companies, and we talk about seat fees, and this is kind of precursor to next week what we're going to talk about with giving people a choice. But there's a company called Xylo, and they've been very successful providing services to large companies to help them to right size and to look at the renewals of all of their SaaS seat fees and costs. And I downloaded this article, and it just was kind of amazing to me, the statistics that they had. And it just shows that Silicon Valley handcuffs about term agreements, individual seat fees, the confusion once you start to grow as a company and you have different employees using different applications, and then the wasted money and inefficiencies. So with that, on the average, they've found that over $4,000 per employee is being spent on SaaS tools and services, and that number continues to grow. And also with 1,000 employees, $1.5 million is unused in SaaS licenses every year, and 38% of SaaS licenses go unused in a typical 30-day period. So when you look at this, the gross amount of cost and waste in the SaaS marketplace and the big, huge behemoth companies, that's another reason for choice and putting control back into the user's hands. And that's something that we're going to share next week with when Tim is back, and we're able to share pretty exciting news about what we're doing here at BlockCerts. And any other comments about that, Mark? Because I know you pointed this download out to me.
Well, just the the sort of rest of the story is not only are businesses locked into these SaaS renewals over time, but if you decide that you don't want to continue that relationship, the question is who owns that data? Do you as
Correct.
the business owner control the data? Does the platform control the data? And I think the answer is pretty obvious, right? Businesses don't really have the control over their own data or their customers' data that they once did in the on-premises data center world. So
Correct.
cloud, again, there's no free lunch in the universe as far as I know. If there is, somebody should tell me. Um,
We'll hop
but
on that band train.
but there's always a cost to convenience, ubiquity, and computing power, and the cost is exactly what you said.
Correct. Correct. And it reminds me of years back with another company. We had some of our services on a corporate credit card, and that credit card expired on a Thursday, and we were shut down from utilizing our services with a specific company. And we had marketing going out that weekend, emails for a launch on a Monday, and I couldn't get a hold of anyone to let us access our own data. And of course, big companies are hard to get a hold of, and you're just SOL. You're screwed. And it goes back to what you were saying. Who owns the data? Who controls the data? And putting that control back into the hands of businesses and consumers is what we believe Web 3.0 is all about. So.
Yeah, and I don't want to end on a negative note because, give credit where credit's due. These companies came from nothing 20 years ago, and
Oh, absolutely.
they grew into these massive organizations that have generally improved the lives of their users. Um, the, the the idea that somehow they'll be regulated or broken up, I don't think that'll happen in my lifetime. So a healthy competition is probably the only way forward, and Web3 represents that competition.
Correct. Yeah, that it creates room for change. So with that, I'm going to just share my screen one more time, and then we'll wrap this up. And we thank everybody for joining us, and would like to certainly have you join us next week. We're rolling out a product called Choice that does give cloud power back to the people. And we would just like to say, join our token community. We've been very busy in the last couple of months as we're preparing for a live token launch here very soon. And if you liked what you heard here, subscribe and click the thumbs up button. And we really thank you for coming on board and sharing your philosophies and sharing a lot of great data and information. So thank you very much, Mark. Really appreciate it.
Thank you, Dan. Thanks, everybody.
Awesome stuff. So join us next week. Tell your friends, tell everybody about this webinar, and we're glad that you all joined us, and have a great weekend, and talk to you very, very soon. So thanks, everybody.